Okay, so hello, I'm back again, and in today's videos, what I'm going to be talking about is the top two simplest assets to beat inflation. If you don't know what inflation is, we're going to talk about that in a second, but I just want to talk about two very easy to get into assets that can help you to outbeat inflation and grow your money way more than your bank's going to, like the amount your bank's going to give you from to put it in these two assets. It's the main two assets I'm focused on this year. Then next year, I'm looking to get into property. So, I want to make this a quick, short video, 5 to 8 minutes. So let's just get into it. So what are the top two simplest assets to beat inflation? First, what is inflation? Inflation refers to a general progressive increase in prices of goods and services in an economy. So that put in simple terms, basic terms, inflation is when the price of goods and services, products from a business, sweets, this, that, all the things that you buy and consume, the prices went from 1 year, that goes up. We know every year prices of things go up. Look at if you're from the UK, look at the Freddo bars. They used to be like 5-10p. Now they're like £50. That's inflation. The price has gone up over time. So here's a little example. Could go through. I hope you understand that as well. So inflation is when the prices of goods and services increase over time. So an example would be in 2017, 6 eggs cost £1. 2018, the price of the 6 eggs is now £1.10. 2019, it's now £1.15. 2020, it's now £1.13. In 2021, it's now £1.32. So that would mean that over time it's increased a bit, and then from 2020 to 2021, the increase would have been a lot smaller, but it's still gonna, because inflation has increased the price. So hopefully that's a very simple way to understand inflation. It's not difficult, it's just the prices of things going up basically. So yeah. So what I'm going to talk about next is the problem with inflation and banks. And inflation, I got that wrong. I don't know how I can't speak. As inflation increases, your money must increase too. Otherwise, the value of your money decreases. So as inflation is going up, your money has to go up too. However, when your money is sat in a bank, where most people's money is when they get paid, they put the money goes into their bank account. When they get paid, they save money in their bank account. So the money in the bank account is being saved in the bank account, and it increases month by month. But in reality, the value of it is now going down. So I'm going to use my hands for this. Here's inflation, and here is the money in your bank. 2020, your money is here, inflation's here. 2021, inflation's gone up, but you still have the money here in the bank. Now the year after, inflation's gone up, but the value of yours is still there. The year after, the value of yours is still there, but inflation still continues to go up. So as this has gone up, your money has stayed the same. So now there's this gap between it where you've lost value. So if this was £1,000 and inflation's gone up 10%, this is now worth £900. That's inflation. So average UK interest rate is 0.25%. That's how much on average the bank returns you. So this means your bank gives you on average 0.25% of your money for saving money with them. So when you put your money in the bank will say, oh, we'll give you 0.25% at the end of the year. What is that? Realistically, what is that? It's nothing. That means if you have £100, you get like 25p at the end of the year. What is that? It's nothing. So what you want to do is you want to put your money into something where it increases, because you're just losing out to inflation. Because as it says here, inflation rate in the UK, in the UK, I can't speak, averaged 2.5% from 1989 until 2021. So on an average every year, inflation is going up by 2.5%, which means that your money has to increase that or above 2 to be on track or ahead of inflation. If you're not on track with that, your money's losing value, and that's a big problem. So here's the question. So how do you beat inflation? If you want, pause the video here and just leave it in the comment. leave a comment how you think you would do it before I go on to the next one. And I'm about to go to the next slide now. So how do you beat inflation? One way, one of the top assets that you can use, one of the top simplest assets you can use to beat inflation is the stock market. Many people won't know about the stock market, but a couple people do. So, the stock market, what is it? It's a place where you can buy and invest into companies such as Apple, Tesla, Microsoft, Amazon. Any company you can really think of, you get the chance to invest into them on the stock market. The stock market is literally just where you buy and hold real live companies, and you can trade the companies too. So, how do you actually beat inflation? So one way could be the simplest thing that you could buy in the stock market, which would be the S&P 500. Now, the S&P 500 returns on average 8 to 12% a year. What was inflation? 2.5% a year. So if you're getting 8 to 12% a year on average, you've beat inflation. Jobs are good. Now, on average, over the last 5 years, the S&P 500 has increased by 14%. That's on average over the past 5 years. So 14%. And in 2021, last year, increased by 27%. So now you can see how you've easily beaten inflation. Inflation's here. Your money in the S&P 500 is here. Inflation's gone up 2.5. You've gone up 10. 2.5. And you can see you just keep going up more. So you're earning money on top of the inflation as well. Because you take the inflation away from the amount that you actually have. But then you've earned way more anyway, so you get to keep your money on top as well. Next, you can invest into individual stocks, such as Apple, Tesla, Microsoft. Whatever company you like and believe in for the future, you'd invest into them. So Apple, 2021, increased by 31%. I can't read. The average of the last 5 years is a 21% increase. So over the past 5 years, on average, you'd get 21% each year. Compared to 2.5%. I mean, compared to 0.25%. Think about that. Tesla, on average, 29% increase every single year. Well, over the past 5 years, I've lost my head. And in 2021, increased by 20. I can't read 25%. I've actually lost my head. Sorry about this. Tesla, 25% increase in 2021. Averaged over the last 5 years is 29% increase. So over the last 5 years, you'd have increased by average 29%. Now, Microsoft, one of the other top companies, Apple and Microsoft are seen as the top two companies that you can buy and hold. So Microsoft, last year, increased by 43% compared to 0.25%. Just think about that for a second. 43 compared. You've still made over 40% increase on your money. Just investing in Microsoft alone over the past year, you'd have made, beaten inflation, take away inflation, you've still made 40+%. So why would you keep your money in the bank? And on average over the last 5 years, it's a 34% increase. So stock market's one of the best assets you can put money into, and one of the simplest. You literally just, the way you'd save it in the bank account, you just put it into the trading brokerage account and just keep adding it in, recurring payments, and just put it into the stocks or the S&P, ETFs, index funds. And Bob's your Uncle Sally's your aunt. Let's go to the next one. Drum roll, please. I'm not going to do a drum roll. Crypto. Everyone I know full well, everyone who's watching this knows about crypto. And if you know about crypto, you know the gains that people have made over the past year. People have become millionaires, maybe an odd billionaire, luckily somehow. But a lot of people have made a lot of money in crypto. Bitcoin, Ethereum, XRP, Crypto.com, Solana, Cardano. People have made a lot of money in these over the past year. These easily beat out inflation and the amount that the bank's going to give you. Yes, it's beating the stock market as well, but I trust the stock market more because I know more of the companies. I know they're legally traded companies. Not that these are illegal or anything, but you get what I mean. You can get big returns in crypto, but I just trust the stock market more personally. But it's, you do what you do. Now, These are just 3 random ones that I've held. Ethereum up 162% in 2021 compared to your bank giving you 0.25%. With £1,000 in your bank account, you'd make less than £10. £1,000 in Ethereum, you'd have made £1,620 in the last year. XRP up 136%. You'd have made £1,360 from £1,000. Crypto.com up 479%. 479 compared to being up 0.25% in your bank account. Up 479% compared to 0.25% in your bank account. Don't talk to me about putting money in the bank because it's safer. Shut up. It's not because in the bank you're losing money. If you put £1,000 into Crypto.com, you'd have earned £4,790. Your 1,000 would now be £5,790. That's all I've got to say. All I can say is learn the stock market and learn crypto, then eventually get into property. Learn the stock market and learn crypto, and then eventually get into property. Start researching cryptocurrencies, start searching companies and that you can invest in on the stock market. And instead of saving any money in your bank account, put it into these 2 assets. If you want to save for a property, do what I'm doing. Create a pie in your trading account or hold something in your trading account where you put your property savings into that. And then when it comes to you wanting to buy the property, you'll take it out. And then whatever you've saved, because you've held it in that account, in that stock, in that ETF, whatever it is, because you've held it in that stock brokerage account, whatever it is, you're now taking out more than you've actually saved for the property. So you have more money for the property. Come on. That's all I've got to say. Beat inflation by investing in stocks and crypto. Very simple. 2 easy ways to get into this wealth circle. And yeah, very simple video. Thanks for watching. If you liked it, like, subscribe, comment anything you want to know. Boom, Bob's your uncle, Sally's your aunt again, and Luke's your cousin. Thanks for watching. Goodbye. Peace.